Hey TikTok, Jim Malone here, coming to you live on Dallas Trading Floor. I'm on TikTok at tiktok.com/@JKMLNE. I'm also on Periscope at PSCP TV/Dallas Trading Floor, and I'm also on YouTube. It is a Wednesday, very historic day. Elon Musk and the team at SpaceX hopefully is going to be trying to launch today. Kind of excited, and just everything's out there. So just wanted to kind of go over the charts really quick here, kind of have a new little format. Basically, the market is still up. It's just amazing. It's up 900 points in like 2 days. So it's tremendous. It's not all roses though. This morning I was stopped out of a position that I had on Nvidia, but it seems to have come back. My positions in Facebook and my positions in Tesla seem to be doing okay. So go figure. It's just one of those things. Again, the market is in an upward movement. Right now, the Nasdaq is finally turned positive. It was red this morning, but it's turned positive at 93.74, and I just want to go ahead and show you that. Also, I think we're coming very close to where the spider may test. I believe the test is going to be at the 308 level, but let's see if we can bring something up on the screen to show that here. And I think that's going to be a critical level. I'm not sure that it's going to move higher after that, but you never can tell. It's it's just a strange kind of thing where it may be running higher, it may not. I do think, though, that we are reaching a little bit in the market, and some of the stuff from the Coronavirus with the unemployment rate, that really, I don't think that hit yet, but for right now, the market is in an uptrend. So go figure. It's just one of those things that that's really interesting. So let's see. I've got a question from TikTok. Tech has been getting out of tech and putting money in recovering stocks. Well, you know what? I don't think so. It's true. I took a little bit of a hit on my Nvidia, but my Facebook is holding strong. The best of the tech seem to be doing fairly well. I mean, it is true that the Nasdaq was down a little bit this morning. The S&P, just want to show you that real quick. I'm going to slip over to that slide here. Now, for those of you watching on TikTok, if you want to see the slides, they're available on YouTube and on Periscope. Periscope seems to work real well for this, and that's pscp.tv/Dallas Trading Floor. Now, here is second. We should have a chart of the spider, but the interesting thing here, if you look, you'll see that the price of the spider currently is 301.93. This is interesting because I do believe that we're going to see some resistance at about the 305 to 308 level, but we're still not there. As you can see, the volume is low on this, so you go figure. I mean, it's a kind of an interesting situation. So let's see. I'm going to see if I have. Oh, hey, man, thanks. Oh, you're on. Great. Well, here's the thing about Tesla. I moved into Tesla, yesterday and I sold a call. It moved lower. I thought I was going to get stopped out, but it appears like it's moving back up again. So, go figure. It's just one of those strange. It's one of those strange things where, sometimes it works. With the launch of SpaceX, I think that's going to bring some very positive. Fact, they're going to send the astronauts out in a Model X, which I think is kind of cool. But we'll see. I mean, it's still trading. I think a key level for Tesla is about 825. That's where I have my call. That's where I sold my call for the Friday expiration at May 29th. So I just want to go back here and show you kind of what the spider is doing, because this is a critical thing. And I just want to show you how it's moved up in this line. If you can see this, it's showing nice strength today. So the question is it going to continue on this route? Well, I do believe there may be some resistance. We may hit some resistance that was before March in February. So I don't know, but it's really hard to tell. With the Federal Reserve pumping all this money into the economy, it's very difficult to figure out kind of where it's going to be. So it's really difficult. So let me see if I can show another comment here. Hey Jim, what tech index fund do you recommend for long term, like the XLK? If you're gonna play long, I think you need more safety than just the tech. I would recommend the Qs, the QQQ. Why? Because it covers the Nasdaq 100, but it's weighted towards the best performing stocks. For instance, Apple is a very big component in there. Microsoft is Nasdaq. So if I was looking to do a long-term thing, and here's the strategy that you can use for for a long-term kind of kind of way to go. If the market is in a confirmed uptrend, which it currently is in a confirmed uptrend, then you can you can basically go all in an index like the Qs, and I do recommend the Qs because they're very strong and they cover basically what you need to cover there. And so if you're looking to do long term, that's a good way to go. That's a good way to go. Let's see, I'm going to take another quick question from YouTube and then back to my favorite tech talk. Well, I think that basically on Tesla, I do believe that there is some resistance at 825. That's why I put my call there, because that was where I believed that we were going to get the best. We're going to get the best results. But if you're looking to build capital, it's great to do that in a ETF and not necessarily in just a direct in a stock directly. So some of these ETFs can be very good, but the strategy I think you want to take, and this is a proven strategy, by the way. I don't try to put out anything that hasn't been proven, is basically to look at the leaders. And one of the, I want to show you this screen here. This is what they call the IBD. Now there is a ETF that tracks the IBD 50, and I highly recommend it because of its excellent performance. I want to show you this based on daily closes. Now, of course, this is over a long period of time. Now, we've come through this little down spike here. Oops, I lost my connection there, but basically what it's outperformed the S&P 500, and that's really the benchmark that you have to look at in terms of in terms of an index. So let me see if I can pull that back up here and show you that, because I think think this is really instructive of if you want to, if you want a more set and forget and you just don't want to be continuously switching in and out of stocks, the IBD 50 index is tracked by a fund called the FFT, and it is definitely something that you should look at. I'm showing the which is done very, very well, as you can see, and it's daily closes. But if you look at the IBD 50, which is tracked by this ATF called the FFTY, if you want to accumulate capital, this is really a good place to be, because as you can see, it's had a much better performance. Performance, as they say, can never predict kind of where you're going to go, but something that you definitely want to look at. So let's see. I've got a lot of questions here today on TikTok, which is great. Shove it, IBD. Okay. Well, all right. Well, okay. A lot of people don't IBD, but I certainly have made money. Okay. Well, okay. Well, not everyone's happy out there. Okay. Okay. Well, I guess you can do what you want on there, but I've definitely made money on the IBD. So, that maybe that's just me. Maybe that's just me. Maybe on that. I don't think so. But anyways, just a thought. Okay, so that's kind of where I want to talk about the tech. So let me go get some more information. I'm going to show you a slide here, hopefully on Tesla here. If we pull it up, let's see. All right. Okay. All right. So, what do you think the stock market will dip again? I need to put. Okay. I do think that when the spider hits 308, I think that I'm definitely watching for a change in direction, because I do believe there is resistance at that point. But it's hard to say. There's just been so much pump. Where it's going to end. That's because expecting it to reverse and see resistance at 275 on the spider, but that didn't come to pass. I mean, it's above 300 right now. I'm wondering. I think they're starting to, because companies are now starting, unfortunately, to to have difficulties. I don't know if you know this, but Hertz went out of business. They actually filed for bankruptcy, which is kind of amazing. So I do think that we are going to see some individual shorts, but shorting an index right now, I don't think is necessarily the best way to be, the best play to make, because if we're shorting an index right now, I think that we could potentially be seeing some higher motion. So that's just basically the way to be. So in terms of the index is, you know, if you're going to accumulate in an ETF, I think the best place you can be, as long as the market is a confirmed uptrend, is in the Qs, the QQQ. All right, so stocking and shows. Okay. All right. Index or okay. Well, I am talking a little bit here today, and maybe I don't know. Maybe not. People don't like that, but I do think that we're going to see. You know, I think we are going to see some potential motion up from here. So it's the kind of thing where you have to be really careful when you get ready to short, because one of the things that happens when you do shorts is that there can be these terrific downdrafts that give you holding a situation that you don't want to hold, because what causes the market typically to spike up in these blow off tops, like for Tesla, is typically what will happen is the shorts will be taken out, and that's definitely when the shorts are taken out, that's when they have to cover, and that's when the price of the stock moves up because people are unwilling to sell. So that's a thing you have to watch out for, and you have to set stop losses very carefully when you're shorting. I typically use a 5% stop loss. So if the stock moves 5%, with the market in this recovery, are we going to see people exit gold and silver? No, I don't think so, because there's still part of what moves the gold trade is the worldwide demand for gold. It's not just the demand for dollars. In many countries like India, there's a flight into the precious metals. So there's a lot of demand from the rest of the world for gold. Now, there is two really important gold stocks that I'd like to point your attention to, and that, of course, is that is the KL, Kirkland Lake Gold, and then and I think that is the best of any of the excellent gold mining stuff companies like Barrick. And then there is Fremont, Nevada, FNV, which does the same. So I misspoke. KL basically is a Canadian miner that mines, and that's definitely a place to be. I am not one that believes in physical gold, only because it's hard to transact, and I think that when the demand for gold goes up, you can do ones that I like very much, or KL and FNV. So let's see. Let's see. There's a spicy guy on here. All right. All right. Okay. So I'm not funny. Oh well. That's the way it is. But I okay. We got a troll. Jim, love the okay. All right. Well, I don't believe in blocking anybody, because quite frankly, that's the whole problem with the internet. Everyone's getting offended by this and that. And a troll, that's good. You believe in free speech, even if you're a jerk. So I don't have a problem with that at all. I want to show you this chart on Tesla, because I do think that, again, I think we're seeing some very nice strength in here. We're below the buy point still. And here's the problem. The problem is expensive to buy it. I do think it is the future. I mean, it is true. I mean, I just think in the next 10 years we're going to see a movement to electric cars, and really, in order to do autonomous vehicles, you really need electric vehicles, because the mechanical motors, which are great, they just aren't as responsive, and they can't really be. You can't turn on a dime with them. But with electric, you can use AI. So I do believe this is the absolute coming thing, and it is true. I mean, Tesla is way expensive, and even Elon Musk, a few weeks ago said that the stock price was too high. I think really what he was saying was that he has options, and he didn't want to buy them out at the high price that he had to, because he has an exercise price plus, I think, a margin. I don't know what the contract is. Anyway, here's the thing. Tesla is, people are placing their bets for the future. That's why tech is good. it's not that the other industrial companies, the legacy companies, are bad. Looking indicator. It looks to what the future is going to look like, and I do believe we're going to see a lot more electric cars. Now we've seen a nice uptrend here. We're up about $1 on Tesla, currently selling for almost $820. Sold a May 29th. That's a Friday expiration option for an 825. So I've sold that option. It was down a little bit this morning, but as you can see on this chart, Tesla's number one in its category, and the composite rating is a 96. I've been trading Tesla up from when it basically crested above 80, and that's something I'm making a move. They come up through this kind of a predictable pattern. The composite rating will start about 80, and then it'll move up. Most of your gains are going to be made on 20 of the stocks. I know that sounds hard to believe, but that's why I like to trade only in the top 20% of the market. You know, everybody is saying, wow, everything's on sale, it's so cheap, but I don't like to trade in the lower part of the range. Why? Because most of the gains come from stocks that have a composite money rule writ large. That's why I try to recommend only stocks that are in that range. Now, do I always keep to that? No, because sometimes there's special circumstances. Like for instance, there's a really damaged stock. I'm trying to buy growth stocks. I'm trying to buy stocks that are in the top percent. I don't really want to fool with the lower ones because, quite frankly, it's more risky and you don't get the benefits. So, anyways, let's see. Okay. Oops. I got a thing here. Will this market recovery? Are you going to see? Here's the thing about gold and silver. I still think that there's a hell of a lot of, pardon my French. There's a real problem when it comes to potential inflation. I do think that we're going to potentially inflation, and this is what KL and the other stocks like that are potential. Are potentials that you want to look at, because those stocks are going to do very well in an environment that people are moving into gold. I still don't think that the physical gold, and again, I keep repeating this, I seem like a broken record here, but to buy the physical gold, I don't think that's the way to go. I think the way to go is with the miners. It's kind of like, the old adage, you won't be selling levels to the miners, not being a miner, because, sometimes you don't do as well that way. So just my opinion. Let's see. How do you know when the market is turned around? Well, here's what I'm looking for to see. Every day I try to talk about the SPDR. This is the ETF. This is the world's largest ETF. It's worth about $22 billion. No, I'm sorry, $120 billion. Excuse me, 22 is way too small. And basically what this is this tracks the S&P 500, and the S&P 500, of course, is the broad market index that I think you really want to look at, because it has basically the winning stocks in it. Well, if you see resistance in the way that's moving, then then you want to be you want to be careful, because when it starts seeing resistance, that's when it may turn to the lower. But currently, it has moved well above the 40-day moving average, and right now it's not a good idea to be short the market, because there's money coming into the market. That's the real reason. Now I want to show this chart again. This is available on Periscope. You can go to Periscope at PSCP-TV/Dallas Trading Floor to see this chart. But this is a chart here of Kirkland Lake Gold. Hopefully in a second you'll actually see the chart and not just the numbers once I get a faster internet connection here. But here's the thing. There we go. There's the chart. It's come up. This is the reason why I think you ought to be a little bit careful in terms of gold. Now, Kirkland Lake Gold is one of the best gold stocks, but as you'll notice, it is moving down toward the day moving average. You see it moved up nicely, and moving down. So that tells me that people are trading in their gold stocks now. They're going long. So I want to flip over to the spider to show you kind of how those two things relate to each other, because on the one hand you have the spider, which represents the S&P 500, which is the essence of the stock market, and on the other hand, the chart I'm showing you, KL, is a gold miner, and it represents basically the the polar opposite of that. So if you watch these two, you can kind of see what the sentiment is out there as to the way the market is going. So hopefully we'll come up here in a second with the chart of the spider, and I'll show you this, how gold relates to the spider, how they kind of have an interplay there. So once my internet connection gets going here, hopefully that'll be. How do you know the market is going to turn around? Well, basically that's okay. So let's see. The spider. Okay, what is the spider? Well, the spider again is the world's largest ETF, and it's been around a long, long time. And what it is it covers by market capitalization. It covers all of the stocks that are in the S&P 500. It's roughly equivalent to the 500 companies, and these are the very best. This is a broad market index, much more so than the Dow Jones, which basically only covers 30 industrial stocks. Well, this spider is a proxy for the market, and whenever this spider moves above the 40-day moving average, which I'll show you here in a bullish motion on the market, and that's currently what's happening. It's bullish now. The market is in a confirmed uptrend, believe it or not. As a matter of fact, the spider is up today, and this is just incredible. $2.63 at 301.71. As I've been on, it's moved up another. I think if you were betting against the spider, this would not be the way to go. And here's the chart. As you can see, this is the 40-day moving average. Now, there was some lag here in May. It was looking like it was going to move lower. It bounced off that red line and it continued higher. So right now, the market is bullish, and there is money flowing into the market. That's really what that means. All this stimulus money, a lot of it's coming. It unfortunately hasn't gone to the people that really need it, people that are out of work, as much as it's gone to people that have assets. And it's basically this liquidity injection it's been moving up 2 points. Now, is it going to readjust? I think so, but I'm looking at this chart and I'm seeing these volume bars down here, and that's very, very strong. That means that it is moving higher. So definitely not a time to be short. That's all I say. Can we see the setup? Absolutely you can. I have a setup, and it's Periscope. If you go to Periscope, that's pscp.tv/Dallas Trading Floor. You can definitely see that. You can see the chart that I have up. Unfortunately, I haven't figured out a way yet to broadcast this on TikTok. I'd love to be able to broadcast these charts on TikTok, just because I think they're so important to see them. Let's see. What do you look for to take a trade? Well, here's what I look for. I typically look for stocks that are at or near a buy point. And what I mean, there are certain chart patterns, one of them being the cup and handle, that are very auspicious, meaning that there's a very high likelihood, if that they will move higher. So I'm looking for stocks that have good ones. And as a matter of fact, let me see if I can switch over here and show you a chart of which ones are very close to a buy point. In a bull like we're in currently, the buy points are important because that's where you're going to see the best ones to buy. I like to buy stocks right before they break out. Why? Because that is the most that's the best time to see them move higher in a bull market as we're in now. So that's part of the reason I went in and I went in heavy on Facebook. Why? Because it was breaking out, and sure enough, it went. I was acquiring Facebook. Back when it was, well below 220, and now it's moved higher. It's off a little bit, but it'll go higher again. That's what you're really looking for when you're is to find one that's close to a breakout and then buy it at or just right before the breakout. You can find this because if the stock is in a good chart pattern, you will find that there is a buy point, and typically you want to be in the stock from the point up about 5%. That's your buying range. That's where you want to be in the stock. Now, because I'm cautious, generally speaking, in the way I trade, I typically like to hedge my bets on this. What I will typically do is I'll buy 100 shares, and then I will sell a call for a little bit higher than that out, and I'll sell a call, and the reason is because then I premium, which gives me some downside protection. I also will set a stop loss typically at 7% below where I bought it, and that's very important. I had one. I was stopped out this morning in Nvidia, which is a great stock, and it just got volatile and it moved down to the downside. It moved down below 7% where I bought it. Fortunately, I had sold 2 calls, so I was protected. But I just I didn't change it. I just set it, and I take a little bit of a loss this morning, but it's more than offset by the upside that I've had on the stock. So there are top 4 stocks that are looking to come into buy zones. Believe it or not, and this is really hard to believe because Apple has been sung, but it looks as if Apple may be a candidate again for a buy point, and it's trading very, it's trading well above it was just a few months ago when it was trading in the 280 range. It's trading like 330 range, which is just incredible in terms of in terms of the in terms of the market. So it's just fascinating how it is trading. So very close. Apple again is on very at a buy point. Now, what if you don't have, and what if you can't buy 100 shares of Apple? I feel your pain. I understand. You don't necessarily have to buy 100 shares of Apple. You can buy several shares of Apple, just 2 or 3, or you can buy into an ETF that contains Apple. I think the best general purpose go-to ETF when you're looking to do these plays is the Qs, the QQQ, because with the Qs you can not only can you buy them, but you can also they're also they contain just the very best of the best. So you're going to be getting things like Amazon in there. You're going to be getting Microsoft, the stocks that everybody really wants. I mean, so that's a way to go on that. So let's see, what's the next Apple buy point? I'm trying to find that for you right now as I've been just wagging my tongue here. I'm telling you, I have. Let's see. Okay, according to this, according to my calculation, let's see, where is it? It should be about 3. Hold on. Okay. Why am I not getting that? Okay. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. 3. Okay. Well, I have a new buy point on Tesla, 869.92. I'm just trying to find this buy point on Apple. Let's see. Oh, okay. I am so sorry that I didn't get this. Here we go. Buy point on Apple, 319.79. 319.79. It's and you know it's this is an add-on. This is a secondary buy point. The original buy point was 288, and obviously that did very, very well. Here's one that I was in, AMD. I wouldn't go into AMD. I sold my AMD just because I didn't think it was performing as well as I would have liked it. Basically the buy points. Well, if you have the money, Alphabet, Google, is at 1563. That's really high. I don't know if you could buy 100 shares of that, but it's definitely coming up at a buy point. And this is amazing because these stocks have continued to just, people just continue to pile into them. So there you go. I mean, here I'm going to show you on the screen basically the buy points, and hopefully you can see this if you're on Periscope or on YouTube. So let me just click over to that and see if you can see that. There we go. All right. As you can see, Apple has an add-on entry of 319.79, and basically past the buy point there. AMD, I don't really like AMD that much. I never have done very well with AMD. It's a good stock. I mean, I'm not criticizing the company, but in terms of trading, I just never really made a lot of money with AMD. But it does have a 58.73 entry. The stock that I've made the most with, frankly, is Tesla, and it has a new buy point of 869.92. So there you go. That's that kind of gives you an idea. All right, Home Depot, Alibaba. Okay, hearing about Alibaba, a few days ago I had a covered call trade on Alibaba, all on it, but then all of this this trade friction happened, and basically Alibaba took it in the shorts. The problem I have with Alibaba. Alibaba, unfortunately, is a stock that does not conform to generally accepted accounting principles. So even though it's a very good stock, well, it's important because you have companies like Luckin Coffee. I don't know if you're familiar with this one, but Luckin Coffee is sort of the problem in coffee was that they had fraudulent accounting, and of course their stock went down. Now I'm not saying that Alibaba is in the same category, but I just don't like to take the chance. So that's the thing about Alibaba. I would stay away from Alibaba right now just because of that. Not because I don't think it's a good company, but because I really believe that you're taking on too much risk, and there's enough good companies that actually have to report real earnings, that have real earnings. So there you go. Let's see. So do we have any other questions from YouTube? Let's see. That's about Tesla. Yeah, I covered Tesla. So, okay, let's see if I can give you some information on. So we had a question on Home Depot. I think Home Depot. One of the great things, actually, Home Depot will be pretty good quarter. It looks like, even though we were shut down. Why? Because Home Depot was considered an essential business, and so a lot of the business, and it was kind of unfair. A lot of the smaller retailers, they couldn't compete with Home Depot. So Home Depot not only sold, not only sold home supplies to people, but they also sold things like cleaning supplies and all other kinds of stuff that normally would have, people would have been going in other kinds of stores for. So actually, Home Depot and Lowe's really have benefited from this, from this downturn, because they were able to kind of hoover up all of the other people that would have gone shopping elsewhere. Let's see. Do you just trade the chart patterns? Well, not totally, but I do. I have over the years. I've tried to do it in other ways, and I have never done as well as when I just was very strict on my chart patterns. Why? Because the chart patterns, companies want to make it seem like they're doing better than they really are. Now, I'm not a conspiracy theorist, but it's human nature. I mean, you don't really want to report to the world, hey, we're not doing so well. But the thing about the chart is that's sort of the great equalizer. Also, amateurs that are buying and selling it. So that's why the charts are so important. Is because this is a collect. Sometimes they're wrong, but they're right more than they're often. So I always look at charts. And before I buy, I never buy a chart that's downtrending. But if you're fighting against a chart, it's not going to be a winning move. So the first thing you do, and I know it's very, very basic, but look at the chart. Is the chart moving from the lower left-hand corner to the upper right? Moving from the upper right-hand upper left-hand corner to the lower right-hand corner, then it's trending down. You don't want to buy a trending down stock. Absolutely not. Because if you do, you're going against the grain. And sometimes you can win, but usually you won't. So that's, do you trade options? I trade options all the time. But here's the thing about options. Most people buy options. There's a 70% or better chance that you're going to lose your money. Why? Because most of the time, most of the options will expire, or if they're exercised, they will expire worthless. Being a seller of options, I'm using the what they call the theta decay, the time decay, on the option in my favor. So as the option is less and less valuable. Well, if I've sold it previously for a higher amount, just by waiting it out, just by waiting time, play it. I like to play the covered calls. Why? Because I found over the years, even though they require a fair amount of capital, that they tend to have a very high winning percentage, sometimes over 70%. So by doing that, now everybody will tell you, well, that's stupid. Why would you buy on that? So let me go back to Home Depot, because we had a question on Home Depot. And by the way, this is a tremendous company. It's extremely well managed, and of course, it's everywhere. It's trending. Well, it just closed, and it's closed up. So 246.45. So it's a very strong. It's just been very strong. So this is definitely a buyable. Home Depot is definitely a buyable stock. I would buy this stock, because it is looking like it is producing new highs. So this is definitely a good stock. Now, the composite, it's got it checks off all the boxes. The chart pattern looks good. It's trending from the lower left-hand corner to the upper right-hand corner, and it's looking like it's going to be making a new high. So that's pretty good. Definitely Home Depot. I mean, at 246.45, it sounds very expensive, but the chart's looking very good. If I did buy this, and it's up $3.97 today, or 1.64%. So that's a really, really good thing. I mean, I think they'll do really well when the economy reopens too. So it's just one of those. It's just one of those great, chugging along stocks that this is always good. All right, what about Tesla tomorrow? Well, I do think that's the reason I bought Tesla yesterday is I do think that we're going to see a bump, hopefully, with this launch if it's successful today. That's part of the reason I bought Tesla. I bought 100 shares yesterday, and I probably paid a little bit too much. I paid, over $8.20, $17. So that's pretty good. I do think we're going to see a bump. I do think I'm very much of a Tesla bull. I tend not to bet against Tesla because I don't think, even at its price, I think it's the market is saying that this is the future, and it's definitely a way to go. Tesla now is worth more than all of the three domestic automakers put together. General Motors, Ford, and Fiat Chrysler. Well, Fiat Chrysler isn't quite domestic; it's sort of half domestic. It's worth more than all of those. So that says something to me. It says that we're looking at something that is potentially the future. So that's what's happening here. The stock was out about 6 months, and it's sort of a crystal ball on the future. If you kind of want to know where the future is going, that's where you want to look at the market. The market is responding to the way it works. And right now, the market, much to my surprise, is saying that in 6 months we're probably going to have a fairly decent economy, and that's just amazing. Because I try to, if I just went on total emotions, hell, I'd be under the bed, I would be hiding, I would be buying gold, and I was thinking the world was going to end. But I don't. That's not what. Once the economy reopens, that the winners are going to be even more winners, and the losers, well, some of them are going to go away. So that's why you want to stay in the top 20% of the market. That's why I'm so interested in looking at this 80 on composite rating. Why? Because I want to trade the winners, because typically they participate the most when stocks go up, or the very best. It looks as if, and I'm pulling up the Tesla chart here again. So let me switch over to that chart. And again, if you're looking, if you want to see these charts, they're available on YouTube at www.youtube.com/Dallas Trading Floor, or on Periscope at pscp.tv/Dallas Trading Floor. And of course, everybody, shout out to everybody on TikTok, because most people watch me on TikTok, and I wish I could show these on TikTok. I'm trying to figure out a way to do a green screen where I can show you actually these charts on TikTok, because I think they're really important to look at. What is your horizon for the economy to open? Well, I believe that regardless of what everyone is telling you, there's a lot of political, there's a lot of politics in this, but I think that I don't believe that they're going to be able to. I think the economy, whether they close it or not, is going to start reopening next month, simply because people are just not going to withstand. They can't being shut in. People have to make livings, and so I just think it's gonna open regardless of what anybody says. And they're gonna try to arrest people in New York and places like that, but I don't think it's going to work. I think people are going to be, I think people are going to go back to whatever they're doing. Taking a call off of YouTube. Also, you into find buy points. You please share your knowledge about the ways to find buy points. Okay, what a buy point is. Well, here's the thing on buy points, and I just want to kind of go over buy points when you're looking at charts. Why would you typically, and I know this sounds counterintuitive. When you first look at a chart, you go, well, wait a minute, I want to buy a bargain, right? I want to buy it when it's cheap. I don't want to buy an expensive. I don't want to buy an expensive stock. I want to buy it for the cheapest I can. Well, in the stock market, it's a really strange thing. It's the best typically to buy a stock when it's making a new high. I know this sounds really counterintuitive, but think about it just a second. You want to buy it's like you want to buy something that you know that you can resell. This is the key. Remember, you're not going to hold the stock for 150 years. I mean, you're just not. What you're going to do, you're going to obviously resell this stock eventually. So why do you want to buy the most expensive stocks? Well, one of the major reasons, the easiest to sell quickly for higher money. Why? Because there's more demand for them. So one of the things you look for to finding buy point on higher volume, then that means the capital is moving into that stock. Therefore, that is a potential for the buy point. Typically what you want to find is a pattern like a cup or a cup with handle or a 3-week tight pattern. There's about 7 of these, and hopefully I'm going to tell you what they are. But these typically, what will happen is the stock will go up, it'll meet some resistance, and then it will break through that resistance. And then, because that's when you have the most pressure moving the stock higher. So the buy points typically are at the bottom by the stock if it's making a new high. So I really appreciate that question. That's about that because buy points are extremely important. If you buy on the correct buy points, a stock that's going to be that's going to be doing better. And this is why I typically concentrate on Investor Business Daily or some of the other services. There are sites out there like TradingView is another great one that actually has I don't think it's very expensive. I think there's a free membership on it. You can actually see these buy points available. So it's kind of part of the due diligence you do before you get into a new stock. You check to see, is it a top stock? Yes. Is it in the right chart pattern? You want to put it on your watch list and consider it. And then you want to take that watch list, you want to move that down and pick the top 20% of that watch list. You're not going to get a winner every time, but if you continuously do this, you're going to get winners more than often, more than you get losers. So that's the way we got. So let's see. Do you trade Forex? If you trade Forex, pairs to buy. I don't trade Forex, but people one currency against the other. The classic trade, of course, in Forex is the dollar yen trade. And if you think that obviously the ultimate safe haven in terms of weakness on the dollar, you'll typically want to do the yen dollar trade, and it will give you it will typically get if you see a weakening dollar. But typically right now, I wouldn't be in that trade because it's very weird. Here's why I think that the dollar is, because even though our interest rates are almost zero, people are still buying the Treasury bond. I mean. So that means that's a very strong, that makes it very strong. Now, of course, we don't necessarily want to go down the path that Japan went down. Japan's basically had negative interest rates for about 20 years, and the yen is extremely strong, but it typically the yen is strong, and they've had to move a lot of their production overseas. So that's kind of my take on Forex. Forex is really a great way to make money, but it's really kind of a specialty, and if you really are, you can trade. You should trade in everything. I typically am an equities trader, and I particularly growth stock. It's not that Forex is not a great way to trade. I just want to again move back to the chart on the spider because I think it's the 40-day moving average is this red line here, and it's moved well past the 40-day line. It's up only 500 is a lot of stocks. And it's up 1.47%, almost $4 on index. So that tells me that there's a heck of a lot of money just pouring into into the techs, into the market. And this chart doesn't tell me to buy the value stocks. This chart tells me to buy the tech leaders, the growth leaders. That's just the way I'm reading it. Because what we're looking at here is we're looking at the flows of capital. Why is that important? Well, the flows of capital are going to show us if we're in a bull market, that means people are taking their cash and they're putting it, and they're saying that they're bullish on the future. They think the future is going to be more profitable than the present. If we're bearish on the market, we're going to hold that cash. We're going to put it under our mattresses, and we're going to, pull down the window shades, and we're going to, think that the world's coming down. That's, unfortunately, we have a political party in the United States that sees their only way to victory in the fall is saying that, and the market just isn't saying that. I mean, I'm not trying to take a political position here. I'm just trying to look at the objective situation with the market, and the market right now is looking at this reopening, and they're looking actually to do very well. So it's just a strange thing. I took a career in financial management school, but I didn't really understand it. Well, yeah, I actually am an accountant by trade, actually, but I started in the electrical engineering department and unfortunately ran out of money at the University of Arizona. This is many years ago, and I needed to get a degree quick, so I got a degree, and I became a financial analyst for a number of companies in Silicon Valley with a big firm called Price Waterhouse. And the problem with what they teach you in finance school is that they teach you portfolio theory, they teach you all that stuff, but really they don't teach you how to make money in the market. And the reason that they don't is because they're looking at a macro level. We don't necessarily make money at a macro level. We're going to make money at a micro level. We're going to make money on the moves of individual components of the stock. So if you want to learn how to make money in the market, study chart patterns, okay? And where can you find these chart patterns? Where can you find how to do this? Well, there just so happens to be a book. It's called How to Make Money in Stocks, a winning system for good times or bad, by William O'Neill. And I talk about this on just about every show. Why? Because this book changed my life, okay? It allowed me to kind of understand kind of how the markets work, why they work. What chart patterns are good, what chart patterns not so much. And that's the thing that you can do here. It's much easier to be a good stock trader than it is to be a good engineer. And I'm just flat on that. What advice do you have for an 18-year-old who wants to be a stockbroker today? Well, I wouldn't want to be a stockbroker, and here's why. Because the stockbrokering business is going out of business. Okay, everybody's moving online. What you want to do is you want to educate yourself of how to trade the markets yourself with electronic, basically online brokerage accounts. Whether that be Robinhood, whether that be TD Ameritrade. That's where you want to be. If you're going to be to look for an income source, possibly look at some of the harder ones like engineering, like computer science. I know it's not super exciting, but it's going to pay the bills. It's going to give you the ability to trade in the market and invest. And also, the most important thing when you're starting out is every dollar that you get, live on 70 cents of it, take 10%, take 10 cents of that, put that away as a cash reserve, and then invest 20%. And if you do that, you'll be a millionaire. I'm not kidding you. Don't even compare to being good at anything. Okay. Given the cost of my degree, well, here's the thing about, and here I am. I'm telling you this because when I started out many years ago with my education, I bought I drank the Kool-Aid, man. I wanted to go to the most expensive school that I could, was prestigious. I went to Reed College in Portland, Oregon. Well, it so happened that even back then it was way too expensive for my lower middle class family. And guess what? I had to drop out. Well, I ended up going to the University of Arizona for a while at the electrical engineering department. And the director of the department said, "Hey, I'm going to, you can become an electrical engineer." And at that time, it was very, very inexpensive. It was very cheap, and basically, for basically almost nothing, I was able to do that. That's when if you're looking at your education, look at the return on your investment. If you want to hedge your bet, take a look at one of the higher paying career paths like engineering, but go to a state school. Don't go to an MIT. Not that if you get an MIT, great, but try to go to a state school, even if it's not the top rung school. And when I did my MBA in California, I was also able to do it very inexpensively. But don't overspend on your education because, frankly, the education going to college is going to change very, very greatly in the next few years because a lot of the classes are going online. So the cost of education is going to go down for people doing it virtually, taking it through the internet, and it's going to go up if you stay on the campus. So the question is return on investment. You just want to know, you don't want to graduate, unless you're Elon Musk, you really don't want to graduate with $100,000 in debt if you can avoid it. It's just an absolute millstone around your neck. It's very hard to get going if you have that kind of money. If you got that kind of money. Oh, yeah. Given the I agree with that. So that's the thing. I think it's so important. But learning how to sell, learning how to buy and sell stocks, it's an excellent skill because I wish I'd started earlier because I can always go take a little money and make some money in the stock market, almost always, even if the market is going against me. So anyways, I have yammered on for an hour, and thank you so much for everybody that's come on and asked me questions. I'll be on tomorrow. Just wanted to put it out there. Take a look at the SpaceX launch. I'm very excited about it, and I think it's going to be. I hope it's going to be a success. And I will see you tomorrow at the same time, 2:30, Dallas Trading Floor here on TikTok, and also on Periscope, pscp.tv/Dallas Trading Floor, and on YouTube at youtube.com/Dallas Trading Floor. Good to see you. Bye-bye. And for everybody out there, I think there's only 7 people looking at me right now, but that's okay. On YouTube, I'm here on YouTube every day from 2:30 to 3:30, and hopefully I can answer some questions and make you some money out there. So it's good to talk to all you out there, and I will be on tomorrow. And I'm going to end the broadcast now, but hopefully look at my site, DallasTradingFloor.com, sign up, and I'm going to be putting out an alerts letter on certain trades that I'm in that that are coming up. So DallasTradingFloor.com, and I hope to see you tomorrow. Bye-bye.